Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over that sideways and down action on the Bitcoin chart as we were reporting in the last episode. Now, guys, I didn't make an episode in quite a few days. That's just because we're basically carrying out the same calls that I made in that previous episode. And so if you watched the previous episode, you got the entire spiel. You really didn't need anything new. However, on Sunday, we did get a couple new closes, the weekly as well as the bi-weekly, and we've also now entered a new month, so we can kind of get a little feel for what's going on here. So let's just go straight to the charts, and you can see that, as I like to always point out, whenever we're above this teal line here, we are in a bull market, bull market, bull market, bull market, bull market. And yes, there can be little fake outs, but they tend to be very short lived. And in fact, we are above that teal line there. Moreover, we are above the 200 weekly EMA. And so we do have quite a bit of strength in the market right now. I don't want you guys to be overly bearish just because we're having pullbacks. And that was the lesson that I was trying to impart for the last 2 weeks. Now, guys, if we do just zoom in, of course, we can see a little bit more structure here. And you can see that along with that Bollinger Band midline on the weekly, I have drawn this diagonal teal line just to represent this kind of curve here, right, of that teal line that's a little bit more organic. And so if we do just focus on that one, then we can jump to a lower time frame, let's just say the 6 hour, just to get a little bit of detail. And on the 6 hour, you can see that I did have the teal line marked out there for the weekly Bollinger Bands midline that we absolutely must hold to continue to be in that bull market. We can scarily dip under it, but we have to recover it very quickly. And as you can see, so far we have not lost it. We did have a bit of a wick down here into this 1 and 2 week volatility pivot zone that I did mark out for you guys for a couple weeks now, where we could expect where to perhaps dip down to, and we absolutely killed it here. We absolutely killed it here. Alpha Fam, if you did take that trade to the downside, and if you did, play off of these bounces, then you guys are absolutely killing it. Moreover, if we do just get rid of these weekly pivot points, which we haven't violated yet, you can see we have a lot of buffer room here all the way down to basically 28,000. And of course, if we go just by historical standards, then we could just draw a line out here and say that we do have even a bit more buffer room, even down to 27,000, and perhaps even lower. It's possible as long as we just flash back up and regain this structure up here. Well, if we do turn off that structure just so that we can focus on, pardon me, this pivot over here, just so that we can focus on the structure going on, you can see that broadening wedge that I had marked out for a couple weeks now is continuing to play out. Now, typically for a bullish pattern, you would want to see this thing to be playing out more to the upside, right? Basically, you would want like this, and then you kind of break out like that to go up. But if we're doing that at the bottom, there's a chance that we could break down, right? So in this case, it's a little bit heavy weighted to the downside here, and we would have liked to see us recover this mid channel here and continue that kind of flag to the upside. But as you can see, we did break down from that flag. We retested it not just once, but twice and also 3 times. Rejected, rejected, rejected. We came back down to our diagonal support here of that broadening wedge, which I had conveniently marked out for you in advance. And look, almost to the dollar precision, you guys could have taken that play. We did get a nice kind of tweezer bottom right here, and we do have to see if we get a nice bounce off of this or if we're going to continue to break down, having failed to recover the 200 EMA on the 6 hour over here. We could have a couple more chances. We'll go over the daily in just a bit, but I just want to get a little bit of detail on that price action. Now, I do want to have an alternative kind of structure for you guys to be looking at now that that broadening wedge has sort of played out. We can take a look at this competing structure which is being developed here. Now, there are two things going on. The first one is going to be this falling wedge right here. So if I do just click off this polyline, then you can't see that we do have this falling wedge. And these do tend to break bullishly. So if we get a nice, kind of 5-wave pattern here, and then pop back up, maybe retry once more, and then are able to flip this 6-hour 200 EMA, we could take off and perhaps even tag that $30,500 area, 30,400, 30,500. Now, I'm not necessarily going to call that at this point. We would have to break out of that falling wedge, and there still is some weakness in the other structure that we were looking at, that broadening wedge there. But assuming that we're able to hold this area and push through that 200 EMA on the 6-hour, then we could potentially be looking for some significant upside. And if I just undo a bit of that mess that I made there, then you can see why that might be, because we would put in essentially and inverted head and shoulders right here, and that measured move, whether you want to use this pattern or whether you want to use this pattern, or you just want to use the breakout of the 200 EMA on the 6-hour, which is a powerful breakout if you can get it on that squeeze, right? Then we would have a squeeze that again would have that measured move up to 30,400, maybe even 30,500. And if we look at our historical range, the historical range is suggesting that that's exactly where we would likely top out within within 50% historical returns there. And we already have tagged the bottom 50% historical returns, and so this would suggest that there is a high probability of actually moving in the upward direction off of this bounce and off of this pattern. And should we get that squeeze through that 200 EMA on the 6-hour, that's why I am making this updated video, to kind of give you this hopium so that you can look to see, do we get a nice bounce here? Do we get a little bit of a pullback somewhere in this area, just kind of a check back somewhere in here, some type of interaction with that 200 EMA on the 6-hour, but in a bullish way that can push through it, and then we would be looking for that pop to the upside. Now, that doesn't mean that we are done with the downside here. It just means that we could have a potential mean reversion to the upside that we might want to look out for, keeping that in mind. Now let's go ahead and put the polyline on there just to suggest what could go wrong bearishly. And of course, you can see that we do have this head and shoulders right here, which could have a significant downside, assuming that we do lose this area, which again is why this area is so important. If I do just take a measured move, we can roughly say something like this, maybe build in a little bit of a little bit of a buffer right here with those wicks. And then we could say, yeah, I mean, maybe 26,000, that whole area that I was talking about, that $25,000 to $27,000 area, it's potentially fair game, assuming that we break down from this head and shoulders. But as long as we have not breached the neckline, okay, it doesn't matter how long we go sideways for, okay, we could chop around, we could do whatever we want to do, but as long as we don't breach that neckline, then this measured move is not valid, and the actual reverse measured move is more valid. And that could suggest getting back up to our range highs up here, somewhere around $32,000 in a failed measured move off of that inverted head and shoulders. So guys, we are going to be following these new patterns, and I'm sorry for the lack of updates. Of course, I have been moving to my new place. Yes, I just moved about 6 months ago, but I'm moving again. And of course, this is just how life interacts with you in a realistic way. Guys, let's go ahead and throw on the daily chart. And on the daily here, we can see our current pivots and zones that we need to be aware of. And I have made a change to the formula that I'm using here, AlphaFam. So previously, I was using a lot slower of a stochastic for the volatility pivot, but I have sped it up just a little bit more to give us a little bit more of an edge. Now, every time that I do that, it's going to increase the noise that we receive. So we can either have a very clear signal that's a little bit late, or we can have a quicker signal that has a little bit more noise and could be wrong. But I think that speeding it up in this case is the right thing to do because we have had very low volatility. And so our current volatility pivot is at 28,938, which does give us a bias to the upside as long as we're able to hold that line. You can see that we were rejected from the bearish control zone at 28,795. So as long as we reject that bearish control zone, then the normal thing to do would be to come up and test that pivot, that neutral point of control over here. And so that's why if we get above this momentum pool here at 29,425, and then especially if we capture that neutral point of control at 29,631, I do think that we could potentially see that pop up to the 30s and just play it by ear from there. Of course, we do have that structure that we were talking about, and we also have a marker at 30,153 where we would pick up significant momentum. And of course, if we do enter the bullish control zone, then all bets are off. This thing could just fly to that $32,000 area. But again, if we look at our structure here, that really is the zone for that measured move for that falling wedge. So again, if we're able to get the alpha momentum pool with this volatility pivot at our back, supporting us, lifting us up, then of course we would be naturally targeting that area between 30,153 and 30,700, which I've indicated is somewhere between 30,400 to 30,500 if you just want a little bit more of a narrow range there to target at. But yeah, just popping into this area, that really wouldn't put us on a new bull run or anything, but it could be that mean reversion that we're looking for. So please pay attention to these key levels on the daily: 29,631 conservatively, 29,425 if you want a little bit of a front run, and then we absolutely should hold above 28,938. Should we lose 28,795, then there's a good chance to front run that potential continuation to the downside off of this bearish head and shoulders here, which could take us significantly lower, potentially even to $27,000 or $26,000. So we do have to watch out for that, Alpha Fam. Let's go ahead and just take a look. Let me see if I can just get rid of these markings. Let's go ahead and take a look at the new weekly, and let's see what we can put on there in terms of our weekly levels. And same thing for the weekly. I am speeding up the volatility pivot. And so what we can see is that our new volatility pivot zone is up here around 30,600 and 20, and that does suggest that we could get that mean reversion, but then maybe we're going to have a limit there. Should we be able to bust through 30,620, then potentially we are going to go on that new bull run, assuming that we're able to capture that bullish control zone at 30,886. Again, the weekly is a much longer amount of time. It could take a couple weeks, and so paying attention to these levels is really important in this coming month. And then of course you can see that we don't lose the neutral point of control until 27,100 and let's just say 50, which would just continue to grab liquidity down here. So if we do just have like kind of a scary check back like this, you can see that bulls actually will still be biased, in terms of their control on the chart, because we'll be above the neutral point of control. So above here is bulls and below here is bears, getting the advantage. And so bulls will still have the advantage on the weekly as long as we're above 27,150. It's just that we don't necessarily predict any new type of bull trajectory, just maybe kind of sideways, until we get above that 30,600, 30,000, let's just say $900 area. And of course, the front runnable position here is above 29,722, which would be the top of the pool. Then you could suggest that potentially we're just kind of squeezing down here. It was a fake out, and then we're just kind of squeezing back up. Okay, something like that. Now let's go ahead and just take a look at our, well, first of all, let's just see where the bearish control zone is on the weekly. It's down at 22,000. So even if we take a nice tumble, I would expect us to hold somewhere around 22,000. But we can compare that to the 2-week because I do think that this chart has been led by the 2-week. And so I do like to take a look at the 2-week, even though many people simply do not. And you can see that the bearish control zone on the 2-week is down at 18,000, where we do have a lot of liquidity still remaining, even though we did tag a bit of it. And so if we did just have an epic pullback down to 18,000, grab some liquidity, we'd still be making a higher low. Pardon me, we would also still be holding that 200 2-week EMA. In fact, that would be a perfect alignment with it, and it would be just a retest of the 200 2-week EMA, and that could just send us skyrocketing should we hold that area. Okay, that would be an incredibly bullish thing, because this would essentially be a macro double bottom off of the 200 2-week EMA. Now, guys, we don't really want to predict that we're going to drop all the way down there. As I showed you before, we do have the 2-week Bollinger Bands midline down here around the neutral point of control at 26,757. So I really don't want to predict anything below this type of area of 27,000. Okay, we don't lose all of our alpha energy, which is basically the intensity of the movement to the upside, unless we're below 25,000. So even a dip down to 25,000 on this 2-week chart, we're still very healthy here as long as we get back above that neutral point of control. So as long as we're holding above 27,000, I just can't be too bearish, although I would love to hold above 27,500, because that's where we would start to lose momentum pretty significantly. And that could put us in danger of just slipping down. So above 27,530 and definitely above 29,000, we are going to be in good shape. 29,281 to be exact. And we're just a hair away from there, guys. We're at 29,091. So if we were able to pop up to 29,281, we could get a boost all the way up to this $34,000 zone, and even kind of chop around there with the upper band of the Bollinger Band somewhere around that 36. Again, I just can't be too bearish on this chart. We're still in a good orientation. It just looks like we're having one of these type of pullbacks like we did right here, one of these pullbacks like we did right here. Just this one's coming a little bit early perhaps. And sometimes we just pop up and then we do the move. So we could just pop up and then do the move down also. So don't get fooled. These market makers, they like to take your money both ways. So again, the bullish control zone is above 34,000 on the 2-week. We're going to hold at 29,281. The pivot for the 2-week is actually at 28,215. So we're in pretty good shape. This is my fastened pivot that I did quicken, and that does correspond with the general continuation, the MACD there at 27,783, all of which is above our neutral point of control at 26,757. So again, we're just in really good shape on the macro, guys. And those who are being overly bearish, I just don't see it yet. Yes, if we violate these zones, we can revisit that stuff. If we get below 25,000, okay, yes, there's a huge drop potential for us. But as long as we're above 27,000, as long as we're above 28,000, everything looks pretty good, okay? Especially if we're able to hold above this $29,000 area. And now, we keep pushing up. So again, does this just get a mean reversion to the upside, and then maybe we do the drop thing again, just like we did over here, just like we did over here. Let's just be on guard for both ways and be open-minded to both potentials there. Just be a clever little alpha monkey, not a perma bear, not a perma bull, and just to put food on our table, guys. Okay, that's the name of the game. All right, guys, I think I'm just going to drop down to the 6-hour just to take a look at what our EMAs are doing here, and you can see that we are getting a little bit of that squeeze. We have accomplished, recovering more than 50% of this candle, so this could in fact continue on, and this is a good look at this moment. Okay, that 200 EMA on the 6-hour is around 29,336. Let's just say 29,365 to be conservative, and then I would expect a pop to the upside. If we do go to the daily is considerably still oriented to the downside, but we could check back to 29,350, and then if we got above that, I would start to consider that maybe we're going to turn around. But we do have a wick high right here at the 29,524, and then we could say perhaps we are going to enter a squeeze on the daily. And of course, on the weekly, we really do just need to recover the 9 here, which is going to be somewhere around 29,200. Let's just take the hold momentum at 29,281. All right, guys, that's your alpha for the day. Stay safe and happy trading.